never made it, but I know what it takes. I'm motivated by a mix of emotion. Got my statement, and I'm reading.
All right, guys, welcome back to the channel. We are the Carters. I am Dante, and
I'm Yolanda.
And we've been getting a lot of questions about, is the market gonna burst? Is it gonna burst? Is it gonna burst? Kind of like in 2008, 2009, when we had the big real estate crash. So we're gonna give a little insight on our forecast for 2024, what we think is probably gonna happen in 2024 and going forward. Maybe it's a good idea, if you start, maybe with you being an expert in your field and stuff like that, you probably can give us a better idea of what you've been seeing out there when you're selling a house or purchasing a house, kind of what's going on out there in your opinion.
I don't believe the market's gonna crash or burst. That I know everyone is hoping for. But back in 2008, 2009, there weren't a lot of guidelines back then purchasing a house like we have now. Back then, you could have one of your friends come appraise your house and they could appraise it at a ridiculous value. And now they don't do that anymore. Their appraisal is just picked out of you don't know who your appraiser is going to be. Let's just say that it's put into a system and whoever picks it up is the person who picks up your appraisal and they come out and appraise your house. So it's not going to happen, guys.
So explain kind of how the appraisal affected the market in 2008, 2009. That was a part of it was different reasons that caused the bubble in 2008, 2009, but kind of explain, because you talking about the appraisal part, right? Like, so elaborate just a little bit on how did the appraisal part, having a friend come do the appraisal, affect the market back then?
Let's just say your house was truly valued at $100,000. But your friend comes through and be like, oh, it's worth $150,000, knowing it's really not. So then you get $150,000 for your house, and the value's not there. It's really, you in a hole, really, like going through the market. Yeah, if you get $150,000 for your house is only worth $100,000. You're basically in a hole. There's no other way to say it. So a lot of people were getting loans for houses that didn't have that didn't have the value. So a lot of people were, and then back then a lot of people lost their homes too. And once that burst happened, the federal government put a lot of rules and guidelines on when you're purchasing your house or having to get it appraised, because they weren't letting you put an extreme value on your house that just wasn't there anymore.
Right. And another issue was kind of the banks kind of just lending no doc loans and interest only loans. It was just a lot going on in 2008. That's kind of not what we want to kind of focus on in the video. So it was a lot going on in 2008 that we feel like is kind of like different than now. But like I said, give me some idea on like what's going out there as far as like, do you see like the closing costs starting to adjust? Do you see like what's kind of going on out there as far as the selling, like buying or selling? Like, do you see things kind of shifting far as it's still like a buyer's market? Is it still like, is it turning into like, well, it was originally a seller's market, but is it slowly starting to shift back into a buyer's market, or you think it's kind of the same? It's like it hasn't like went up or down?
Right now it hasn't gone up or down. It's not solely a seller's market right now, right. And it's not truly a buyer's market right now.
Right.
I have seen sellers giving closing costs. Before sellers weren't giving closing costs. It was a seller's market, and they felt as though they didn't have to give you closing costs because they were the hot commodity then.
Right.
So but now it's starting to turn over to the middle. It's like a neutral playing ground right now. And I have seen sellers giving closing costs. So I would say it's a neutral playing field.
It's not, definitely not like it was.
It's definitely not strictly buyers, and it's definitely not a strictly sellers.
Right. And I would venture out to say that I agree with that. I don't think it's going to be a big bubble burst. Like I say, back in 2008, 2009, things were just totally different. Interest rates was lower, and it was just way easier to get into a house. Like now, kind of what's happening, what's causing the market to be the way it is because the interest rates are high. So things are slow because the interest rates are high. Now the interest rates are going to come back down. That's just how things go. It's just a matter of time. It has to come back down because not originally, but at one time our interest rate rose up to almost like 8%, right? I think like 7.9. I think might be the highest it's been. But now it's like back in the sixes, and it's going to continue to come down. And with that, it's not like people are going to be in a position where they're going to like lose their homes because back in 2008, 2009, the interest rates had changed from which you originally purchased a house. And when the interest rates changed, all of a sudden people couldn't afford the house anymore. It was like predatory lending and stuff like that. Now, when these interest rates change, it won't kind of mean a thing. People are still owning homes. They'll be okay inside their homes because a lot of people got in at those 2-3% COVID rates, right? So now people are kind of like scared to leave their house. They don't want to sell because it's almost going to be impossible to get these new rates, right? Or the previous rates. You'll never probably see those rates again, probably in our lifetime. So I really don't think that it's going to be any significant crash. I think things are going to stabilize. I think things are going to stabilize and become normal, right? Because I remember when we brought out very first, was our primary or one of our rental property? Our primary, right? We was looking back at some of the paperwork, and we was at a 5-point-something% interest rate. So that was just like the normal rate. So it'll come back down to like the normal rate, and once it comes back down to the normal rate, more people will get right back in the market. So it's not like I say, it's not going to burst and cause everything to just collapse. As just things will just settle out. A few people will start going out buying more because the rate is coming down. But that's the only thing that I could see kind of happening. I don't really see like any type of, no way it's going to burst. I don't see it, not at all. Do you think this is a good time for people to buy a home, or do you think they should wait until the interest rate go down?
Yeah, I think you should buy your home. If the mortgage is affordable for you to pay every month, buy the home. Houses could be $350 today. By the time you're ready to purchase, who knows? It could have went up to $360, $375. That changes your monthly mortgage. So the value of the home will never go down. Don't wait to purchase. If you can afford the monthly payment, because that's the main focus. If you're able to afford to pay this mortgage every month,
right?
Don't focus on an interest rate. You have credit cards that are higher interest rate than what home's interest rates are for, and you still use that credit card.
Right.
So I would say purchase a home when interest rates go down, then refinance. Refinance for the new interest rate.
Yeah, I would think so too. I would think it's a good idea to buy a home now if you can afford it. Like she said, if you can afford it, I would suggest to buy the home now because interest rates are going to go down. Once the economy kind of slows down, those interest rates are up purposefully to stabilize the economy. As the economy continues to stabilize, those rates are going to come down. They have to come down. So once those rates come down, as long as everything is still in order for you, your credit and all that stuff is still in order, you can always just refinance to get the new lower rate, right? Kind of like same way with what happened when COVID happened. People had a 5-6% interest rate, and something crazy happened, and they was able to take advantage of the new interest rate at that time. So you can always just refi to get the new current interest rate of that time, correct? So I think it's a good idea to purchase right now if it's possible, because when the rates come down, more people are going to step into the market, which again, like you're saying, like maybe the house is $350 right now because of the rate, and people think those prices are going to come down, but they're not, because once the rates come down and more people enter the market, then there you go with supply and demand. So more people are going to be in demand for that house. So now the house may went from $350, $150, whatever it is that it's selling for, up an extra $30, $40, $50,000. It's almost I think it could almost be like a little bit more back to the bidding war era, right? Because more people gonna be on the market, and it's like, well, 50 people trying to buy my house, I'm gonna raise the price up a little bit. I mean, you can, or you just gonna end up getting more offers. So of course you're gonna take the highest offer, right?
I don't think it's gonna be as crazy as it was
Oh
when
yeah, that's probably a little too much, right?
COVID was out, when you had the 2-3% going on. Yes,
Right.
they were very crazy bid wars out there. Sellers were getting 30 to 40 offers on one house.
Right.
I don't think that's gonna happen. Yes, I could see you having more offers, maybe 2, 3 to 5, but you're not gonna be back to the state where you had like 40 offers on a house. That's just during the time of COVID, like we said, interest rates were lower,
Right.
and people had more buying power too. The lower the interest rates go, the more house you're able to afford.
Right, right.
So, that allows people to jump in a different bracket of buying a house. You may was looking at a house at $250, now you're looking at a house that says $300,000. So, I think there will be a few extra offers on the table, but we won't be going back to
You won't be too crazy.
We got
Yeah, I
40 offers
agree
on
with
the
that. I
house.
agree with that. So I have another part though. So as a regular home buyer, I think it's a good time. As an investor, I don't know if it's a good time. I don't really feel like it's a good time because, your ROI, your return on your investment, typically when you're buying an investment property, it could be 6, 8, 10, maybe 12 if we found a really good deal, right? So if your interest rates are 8% to purchase, and you're expecting your return on your investment to be 6, 7, 8, 10%, you're not really making any room on the profit side. I mean, you had one maintenance issue, one person missing rent payment, or something like that. You're definitely gonna be taking a loss. But again, when the interest rate come down, you can also refi out. But just kind of keep that in mind. I would kind of keep that in mind when you're making a purchase as an investment property. You're probably not going to have any profit margin in there for a little while until the interest rates definitely come down. But if you're an investor and there's a good deal out there, it's definitely probably a good idea, to go ahead and you purchase it. Like I say, it was an excellent deal. You don't see the opportunity coming along again no time soon, and it gives you an opportunity to, get into the investment field or just add to your portfolio, which you already have. Then it's possible, but I think it's like a case by case basis. But I would just definitely keep a good eye on interest rates and just make the decision that best fit you, right? But overall, like I say, as far as the market just explode and then everything collapsing, I really just can't see it. Like I don't see it just like popping up out of nowhere like that. Like we all trying to predict it because it's like, you're trying to predict when everything's gonna happen so you could jump in, right? You're just trying to, it's like in the stock market, they call it timing the market, right? So you're trying to time the market. But if you're trying to time the market waiting for a bubble to burst, I don't see it. I don't see it happening. So we just kind of wanted to touch on that subject real quick. And hopefully that answers some of your questions, some of your thoughts. If you have any questions, comments, leave it down below. If you like the video, hit the like button. Please subscribe to the channel. And we see you guys on the next video.
Bye, guys.
Bye.
I never made it, but I know